All right, welcome back, YouTube. So we're going to take a look here at the chart. This is pretty much the similar to, well, not even similar. This is the exact chart that I've been using for over a year on Dogecoin, and I really want to show you how when you do things properly here, you don't have to make those adjustments and stuff like that. Over time, your chart will get proven to be more and more true. And I'm going to take a look here on a very wide time frame, but I want you to see the correlation that we're having here. So if you take a look here back in November of last year, October, November, this is the Elon purchase spike. But I want you to pay attention to what happened before, right? We pretty much were settling around this mid range here, around the 6 cent mark. This is where we had the consolidation. And this is kind of where we were trending sideways, waiting on like the next catalyst, the next bull run, the next really huge injection into the crypto market. And that was pretty much our bottom for the time. We had some flash crashes. I think down here we went to around like the low fives mark. We've touched down a little lower before. This is why this line down here, we had some flash crashes to around like 4 cent. But overall, whenever we hit those lows, when we hit those extremes, we'd see a rush of volume come in, and we have that uptick, and then we bounce kind of where we are right now, or even then, to our equilibrium. So fast forward to today. We see this consolidation here. We've had some runs, some retests, and we are pretty much settling within that same range again. And again, with some of the flash crashes, this is kind of just proving that this is based off of history as far as for our initial run up a few years ago, through the Elon purchase, through the catalyst thus far, through the cycle thus far. These ranges that we see right now are absolutely ideal for acquiring. Now, obviously, if you can catch something and down here in this lower range or even below that, that's going to be superb. But as far as for if you are thinking about acquiring or running like the risk of getting in right now, this is based off of history. You just seen the chart. This is kind of going to be your equilibrium point. So this is going to be where you'd want to be on any of these run-ups, because technically speaking, if you are buying right now and below, let's go back in time here. You've never well, this is a descent, but even if you bought before the big run up at these levels and lower, you'd never, you haven't had an opportunity not to make money. I'm not telling you how to play, whether you want to hold for years or trade or whatnot, but if you bought here, you had multiple opportunities here to make money, even if you got your average down this low. And even when we came down and touched again around this range, we had the run up. This is, so far, this has been proven to work out around 100% of the time when you acquire in this range. Now, obviously, when you're looking for profit, no matter how you're playing the coin, whether that be short term or long term, your entry and your DCA and stuff like that is going to matter greatly. So you want to make sure that you're timing these things the right way and making sure that you, especially with the amount of time, because I know sometimes people had higher averages or they're holding from a few years ago, and you'll have averages up around 30 cent or 20 cent. They're just saying, hey, I'm just going to wait until the next bull run. Again, not financial advice, but if it were me and I'm looking at the charts and stuff like that now, I'm trying to get my average as close as possible to these ranges, just because of the facts that I just said, that this makes it pretty much an optimal opportunity here to get, not only get maximum returns, but literally you don't even have to, depending on how you want to play, you don't necessarily have to wait even until the next run. You're looking at the opportunity here that on the next, not even next bull run, but on the next announcement, to be able to make money. Right. So it's not even putting yourself in opportunity saying that, okay, I need to hold for the next few years, something like that. This is on the very next announcement, the very next spike. You're in the green here because this bottom range here has held up true for so long. And really the longer the next bull run takes for the overall market, not isolating it specifically for Dogecoin, the stronger this range gets, the more attractive it gets as well, because it's saying that, okay, this is going to range. Look how long this is held, despite what's going on, despite the arguments as far as for the coins being minted, despite the stagnation in the overall markets and stuff like that, this has been the range, and it really just kind of puts it in a very strong position here to turn a profit regardless of how you're playing the coin. So that's something you should at least consider. I would certainly think about it while you're making your investment decisions. Let's take a look here at shorts. Not much. We've seen a big push up here off of the 14, but not a whole lot of volume going on. But this was quite a big push up here recently, and we're maintaining that level. So we'll certainly have to see if we're going to get that flash crash again, if we can see a lot of short volume come in and create those sell orders. But overall, the volume is not alarming. But whenever you see like these big candles, because this here is the biggest green candle we've had since March. So whenever you see them piling in and stuff like that, just know that they have a certain price point that they're trying to get the price to. So whenever you see price correlation kind of align with that, don't be too alarmed, because you know that they're trying to get some movement overall. Let's take a look here at Bitcoin, because again, we're trending around the 14-day as well. Had a decent spike, a little over 30K. And right now we're at around 30,359. So ultimately, this is obviously where the majority of the market cap is placed. So this is going to be obviously one of the major signals that we'll use to kind of decipher where we are in the bull cycle and where we are as far as for capital in the market. So even with people saying that, oh, this is, can this lead to like a run to 40K or whatnot, these ranges and stuff like that, especially if you're creating these tops and these sideways here, is kind of bumping its head along the 30,000 mark. The longer that it's here and having these rejections, again, just kind of consider that, grace as far as from the market if you're not where you want to be. Because when you start seeing these runs and stuff in the market, sometimes it can happen a lot quicker. And then when people see things happening, that's when they kind of get motivated to take positions that they could have taken a while ago. So when you see this opportunity, when you see kind of the tide change in the market, just kind of count it grace that that's not being that explosive on the movement side. And also, I mentioned this inside of my group. Just know that until we start printing money again, that the last 10 years of the market and the bull runs and stuff that we've seen, that can make the next 10 years, the next bull run a little different until we start printing money again. I do believe we will, obviously, at some point, just because of the way things are structured. But the injections that we were getting monthly over the last 5 years or so, especially people that came into the market around 2020, just know that some of the things you witnessed and some of the violent upswings that you had, that doesn't typically happen in a normal market. So you're certainly going to have to be a little bit more patient as you see these swings. The market typically, it moves up for certain in the bull run, and it's kind of, when you throw something in the market, it's kind of hard to miss. But that violent upswings, that stuff that we were seeing before, is a little different. Now we'll see how that correlates to crypto, because typically that's what happens in the stock market. And we know crypto is a bit more volatile, so we'll have to kind of gauge that. But based off of history, just know that things can be a little slower here, but still that upward trend, but just not as violent. Just kind of keep that in mind. Let's take a look back here. Yeah, still we're right around the 14, so nothing extreme here. We're kind of hanging out on around that 14 again. Just kind of consider that grace going forward. Even Doge here, if you zoom in, we're right around that our 14 as well. So this is our 72-day, the orange line coming down here. So that'll be a great consolidation point to see if we can get an apex between here. If this gets closer, it looks like it's going to cross the 72 and the 14. Obviously, I'll make a video about that if that happens. But hopefully, we'll see an apex here, and we can have kind of determine whether or not we're going to have a breakup or a breakout, or a breakdown, or if this can be a golden cross, death cross, or something like that. But we still have a few more days before that interaction happens, so we'll just keep an eye on that. Let me know your thoughts as far as on price action, what you're doing in the comment section. I'm happy to be back charting with all of you. And this is my first charting video in a while. So we'll be doing more of this, keeping an eye on prices and stuff like that. And pretty much just conversing as the market makes its turn. And hopefully we are transitioning into the next bull market, but we'll see here. We certainly have to wait until those macros align. But until the next video, I appreciate all of you. Thank you. And I will see you then.